The government's debt is the citizens' debt. So the American public currently owes $104,804. Basically, when a baby pops out of its mom, it owes. What do you do, Kanekis? Welcome back to the channel. I hope you're all doing well. So in this one, we're going to talk about the fact that the US Treasury is insolvent, aka bankrupt. But before we get into it, please hit the like button, subscribe, be sure to share the video out. It's important that people know this and important that they also know how to protect themselves from it. So to start, we're going to define the word insolvent. It's a financial term. It's basically when a company can no longer meet their financial obligations as debts become due. The condition for that is when liabilities are greater than the value of the company. So that basically means the value of the debt is larger than its assets. I'm sorry, but this is going to be a dark video. I'm going step by step with the definitions. To explain what the national debt is, simply put, the national debt is similar to a person using a credit card for purchases and not paying off the full balance each month. The cost of purchases exceeding the amount paid off represents a deficit, while accumulated deficits over time represents a person's overall debt. You can refer to the calculation over there to see exactly what the debt is. So now that we've defined it, let's examine the US Treasury's balance sheet. Now, the US national debt is rising by $1 trillion about every 100 days. I'm just going through the headlines right now. US debt is up $64 billion in one day to start the month of September to a record high of $35.3 trillion. Spoiler alert, it's much higher than that now. And they're forecasting it'll be $1 trillion by the year end, and that's the forecast. Another headline, interest on the debt. So not the debt itself, but the interest that the government is paying on it is now eclipsing $3 billion a day. The US government pays more interest on its debt every 2 seconds than the average American salary. By the way, follow me on X. I often retweet these facts, so you'll be seeing them as and when I do. So be sure to follow me on X. It's at Kaneki Kojo. Going through the numbers, is about $1 trillion per year, as we've seen, about $3 billion per day, $34.5 thousand per second, which is just about half of what the average US salary is. Now, the next tab I show you, don't panic, there are a lot of numbers here. I will break it down for you. So that's the national debt we saw, $35.36 roughly trillion. Now look at the debt per citizen. The government's debt is the citizens' debt. So the American public currently owes $104,804. Basically, when a baby pops out of its mom, it owes. It's freaking dark, man. It's dark. The US federal budget deficit, basically, they're spending more than they're earning, is roughly about $2 million, but they're understating it. The actual value is $2 million, but they're understating it by about $300 billion. The interest on the debt, as we've seen, is pulling quite close to $1 trillion, and it's already eclipsed the defense spending. So the amount they're spending on the Ukraine war, the Middle East war, it is less than what they're currently spending on the interest. Remember, the interest on the debt is the fee they're paying for not paying the original debt down. They're spending more on that than the defense. It is very likely that it may end up passing Social Security. Savings per family is $10,000, but the personal debt per citizen is $75,000. It's not looking good. It's not looking good, guys. And I think this is the key one. This is the key one that points to the fact that the Treasury is bankrupt. So if we look here, The national assets, the total US national assets is $213 billion. But if we look to the right, the unfunded liabilities, remember, if the liabilities is valued more than the assets, you're insolvent. Look at the unfunded liabilities, $218 billion. So, how is the government going to pay this down? As we mentioned in the last video, they print money, and that's the M2 money supply as we're seeing here. Look at the numbers, increasing, steadily increasing. As we're speaking, they're printing. They are printing. But I want you to focus on this right here, the currency and credit derivatives. This is basically the dollars that you spend. You go out, you spend it in stores, you buy stocks, bonds, whatever. You use them in stores, and that's basically the currency and credit derivatives right now. But this M2 here is the money in the US Treasury. Now, I don't know about you. This is like grade school math. Grade school math. $20 trillion is less than $631 trillion. So how is the government going to fill that gap without printing money? This is why I keep telling you guys, look, invest your money, because they're going to print to the moon. They're going to print to infinity. That's the only way they can pay down their debts. Now, what should you be investing in? Sure, the stock market, but personally, I think the money they print goes into the stock market anyway. So in terms of percentage difference with real gains to what they're actually printing, I don't think it makes much of a difference. But in a future video, I will talk about gold specifically, gold and silver, but specifically gold. As you can see, the gold price, when you factor in the actual gold reserves that the government has, the website says it's roughly $3.49 thousand. In reality, the actual price right now is about 2.5 thousand. So you can already see the leg room that gold has to run. It's not looking good, guys. Just long story short, I don't want it to be a very long video because personally, I'm already feeling a bit depressed. It's not a fun website to come onto. But if you want to feel a bit sad tonight, just look at usdebtclock.org and watch the numbers go up. The numbers only go up. So yeah, protect yourself, guys. Invest your money. Don't just leave it in your bank account. If you have like a high yield savings account, put it in there. Personally, I use Trading 212. It's not a sponsored video. I'm just putting it out there. But of course, all I say now is not financial advice, by the way. Do your own due diligence. But yeah, put your money to work, man, because they're not gonna stop. They're not gonna stop printing. They're not going to stop borrowing until the cards come down, the house of cards. So that's about it for this video. I hope you enjoyed it, but I hope you found it informative. If you did, please hit the like button, subscribe as well if you're new. Like I said, please do share the video out because lots of people need to know. Lots of people need to know why their purchasing power is going down, why the cost of living is going up. It is because they are printing money. And it affects everyone. It really affects everyone because the dollar is the global reserve currency. All currencies are tied to the dollar in some way. So when America prints, it's everyone's problem. I'll be sure to put the quote up. I can't remember who said that, but it was one of the US governors. So yeah, I hope you found it informative. I'll be back in the future with another video. I'll see you there. Peace.